May profits be upon you. I hope you all are doing well. I hope your last week was fantastic because last week's video contained some really nice setups, contained some really nice indications for biases. Whether I gave some really good direction on those, and I hope you benefited from them. If you have, make sure you hit the like button and leave a comment. Okay, so we're going to go right into it. Why? Because the news that's coming up, the fundamental news, on the economic calendar, doesn't really have anything that's going to, that I'm going to have to plan trades around. All right. It'll be more impactful to guys that are trading daily, the day traders and the scalpers. All right. But for longer term trades, not so much. Now let's get into it. Let's start with the Dixie, because the Dixie, everything moves around the Dixie. Isn't that correct? The US dollar against a basket of other currencies. All right. So what we can see is that it turned bearish, right? Turned bearish around here. This was the high. All right. And then we had this lovely break of structure here. So price just started to fall, right? Came down, left these relative equal highs around here, formed a bearish order block there, and then ran into this demand zone. Price found its support here, and you saw that thrust up, and price pulled back a little bit and then continued higher. This is where we are now. Okay, so what I want you to see is from this swing high to this swing low is our higher time frame trading range, right? And price is now pulling into we're in discount. Discount is the discount area is 50%. Half the trading distance on the downside, on the lower side, that's discount. This is premium prices. All right, you want to take your longs from here and your shorts from here. And with that in mind, we're below 50, but we are in discount and we are heading towards that equilibrium, that 50% of the trading range, the 50% equilibrium. All right. I want you to also make note of there is a major breakout level from 2017 right here. And then there's another breakout level here from the COVID highs. Okay. And that happened here. And trading above that, you saw how price was just moving with the rate hikes and everything moving up, very strong, bullish. All right. And then we started to break down. All right. And then we came back to retest this level. All right. We were here for a couple of weeks. Right. And then we finally broke through, came down, found support here. And then again, we are now trading above the major breakout of 2017. This is a good thing, because this is let me say that it's a good thing for direction, because what we can see is price finally gave us that close, which is what I talked about in the last video. It gave us a daily close above this level, and it moved up and then came back to retest it. This is what usually happens on major breakout levels. When price breaks out, it comes back to retest it. And from that retest, which is what I drew everybody's attention to last week, I said that it'll probably come back to test this major breakout level. We're going to see if it holds, and from here, it could go on up. And I also pointed out that we have a trend line here that price is, what do you call, kind of respecting, right? And when it came back here, I said maybe it might come back and retest that trend line. Well, it came very close to where they intersect the major breakout level and the trend line, and you see what happens from there, right? Now, where are we at now? We're testing supply. We're testing the extreme of this supply. This is actually a 4-hour supply zone within a daily supply zone. All right, and there is relative equal highs up here. You know that this is a liquidity zone here for market makers to come back and target. So this is going to draw a price to it. All right, and if we go to the 4-hour just to take a peek, you can see how the 4-hour was formed here. There was a lot of fair value here, but a fair value gap here, right? But what you don't see is inducement. You don't see the structure here, a high that price could come back and target. Why is this doing that? Where a price could come back and target. All right. I'd like to see inducements or right below or right above demand and supply zones, because that's a draw to price. All right. And if I don't, in the instances where I don't see inducement, then I believe the zone itself is inducement for a higher zone. All right, that price will take this out like wow. And I think that may be the case in this that may be what happens in this case. All right, because we have relative equal zones, relative equal highs here, and I believe that price will continue up. We may see a pullback and price will end up taking this out. There's a fair value gap right above, right, and another zone, and I believe this is the zone that price wants to come and get, using the relative equal highs as inducement to get up to it. All right, so that's my theory, and I'm sticking to it. But so I am bullish right now, relatively bullish on the US dollar, and bearing in mind the fundamentals at play right now with the core PCE data that came out, it shows that inflation, that number came in a little hotter than expected, and it shows that inflation is not going away. It's a nagging, it has a nagging persistence, and the Fed is recognizing that and will likely look to continue rate hikes. So that means the US dollar is going to get stronger, right? So what am I looking for? I'm looking for price to continue higher. Now, this week overall, and I'm talking about for all markets, all currencies, I'm looking for pullback. This is a pullback week. Let the market play. We're looking for corrections to impulses. All right. And I want to let the market make just form its structure, and then take the buy or the sell. And I'll be very specific when I get to each and every one of these markets here. Okay. So with the dollar, I put enough time in on it. All right. I'm looking for price to quite possibly respect this zone, this 4-hour zone up here, show a little respect to it, give a reaction to it, and quite possibly come back down to this breakout area where we'll find this trend line, right? And then set up for another run, another push to the upside, take out these relative equal highs and whatnot. But I'm looking for a pullback of some kind. All right. If you want to take your buy from here, that'd be very dangerous. That's not a high probability. That's not a high probability trade to take longs from here. All right, you can take it if you want to, but that's not the way I would recommend anybody trade. All right. I'd wait for the pullback, and then I'd look for confirmations that price wants to go higher, and you can catch those confirmations on the 1 and 15 minute. All right, and I'll go over that in another video. Okay, so we're going to Euro USD. Let's go to the first stop. Euro USD. You see how we had this weekly zone up here. Let me go back to the daily. All All right, you see we have the weekly zone up here. I went over this last week. It's 2 breakout areas, major breakouts. All right, just like this is the inverse of the Dixie. All right, this is the inverse of the Dixie, and you can see the major breakout levels easy. All right, we see one here and we see one here, right? And just like the Dixie, I had the major breakouts in the other direction at the same areas. Okay, COVID lows and highs and that 2017 craziness. All right, so what do we have now? Last week, what did I tell you? I was looking at this zone here. It was on a 4-hour chart. I pulled this zone out, right? And I said, for Friday, let me see, it was a Friday candle. We saw price make this a nice little candle there. What do you call it? I call it a pin bar, right? I said, don't take this pin bar on face value because it's a Friday candle and it's done. It was formed on a Friday, which means it tends to have lower volume because a lot of traders, a lot of bigger institutional traders, they don't, smart money doesn't, some of them don't trade on Friday. So the volume is a little bit lower. So you can't take these candles on face value. Okay. Some people look at this pin bar and say, oh, we're supposed to be buying now. Blah, 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 blah. See what happened? Go bad, bad. All right. So what did I point out? I pointed out last week that it's supposed to, I'm looking for price to head down from this zone. All right, go look at the last week's video and you'll see what I'm talking about. I said, I'm looking for downward action from this zone and you should be rich. If you are rich right now, drop a like and leave a comment. That's all I ask. I'm not asking for a percentage. I'm just saying recognize and recognize. That's all I'm saying. Give me a little dap on that. Okay. All right. So what did price do? It swept that low and we climbed further deeper, penetrated deeper into this zone. And I want you also to point out, some people like to trade W patterns, right? See this big W pattern? All right. When you see that big W pattern, it's an extended W pattern, right? You're waiting for price to come back to this neckline. Test that and you can take your buys, right? That's the way it's taught. All right. All W's are not equal. They're not the same. All right. There are degrees to these things. All right. You can see that W pattern here. All right. Boom, 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 boom. You're waiting for price to come back here. When price does come back and test, there's hardly any reaction to it. All right. We just penetrate and we're going to take that out. All right. So be careful with your W patterns. The reason why, now some people are going to say, well, your demand zone is failing. Look, it's already down past the middle of it and everything. And what did I point out last week? This is a weekly supply zone up against a daily demand zone. Higher time frames just outweigh and way stronger than the lower time frames. That's it. They trump the lower time frames. The higher time frame structures rule and dictate in those lower time frames work within the framework of the higher time frames. That's it. That's why they call time frames, because they frame price. All right. So that's just an aside. So what do we expect for the Euro USD this week? I'm expecting price to continue down. All right. But you see how this movement is, it's kind of impulsive in my view. Okay. Not as impulsive as this news candle over here, but it's still impulsive moves. And you can see that we made this low here, right? We finally broke that low with a candle body break and close, right? Pulled back up for the RTI, the return to impulse at this supply zone, and we fell very nicely from here. Again, we have an impulsive move that left a fair value gap here, right? Wait for price to pull back up. Wait for price to form structure. so that we can say, hey, this will be a nice area to take a confirmed sell. All right. If you want to take buys, you can. All right. Do it as a day trade. Do it as a day trade and make sure you manage your trade. All right. You can take buys from here. Look for a price to turn around or whatever, and take that buy to the sell. But I'm not doing it, and I don't recommend you do it. I think sells are what's in order here. Even though we're in demand, we can see this demand is probably on the road to failure. We are coming towards this the extreme of this daily demand here, this 4-hour extreme. But you'll notice there is no inducement, right? So I don't have the highest hopes for this zone to hold. You understand what I'm saying now about that inducement? All right. That's my lesson for the day. Okay. So as price makes its way down, let it pull back. Now I believe this level here at 1.06297, right around here will be the level to watch. Now, why am I picking that level? Let's look at the daily, and I will show you really quick. That zone, that area has had some frequent flying miles there. Look at this dotted line. All right, this dotted line going all the way across. You can see it's been used as resistance there, support there. You can see all the activity around here. It finally got below it, came back, retested it, and then finally shot up. Here we are again. Boom, we were tested, coming back through. Price has penetrated once again. If price comes back up here, I believe this level holds, and we will see 1.0480. All right, that's where I think we're headed. Boom. Okay, and quite possibly beyond that. But if you can get involved in a confirmed short right around here, all right, wait till price gives you a confirmed short before you jump in. You want to see price flag. All right, once it starts flagging, all right, doing this number, all right, up and down until it gets to an area where it leaves and breaks market structure and pulls back. That's where you want to get in, and that's where you want to take your selves. I just helped you out there. All right, let's look at euro pound. All right, not exactly on my hot list, but it's one to watch. Why? Because look at the daily. All right, you can see we're in this uptrend, right? And on the weekly, you can actually see it a little clearly. Why am I calling that an uptrend, and why is it marked weekly? Because you can see where the market is not closing past that level. All right, we see all this wick action, but it's not closing past that level. It's holding. So that's something to bear in mind. All right, and where it coincides with a demand zone. All right, I'm looking for price to I'm looking at it as another confluence. You understand? Not a buy signal, but a confluence. That's all. So if we're looking at Euro GBP, the last break of daily swing structure was here. This high, this low, and then this higher high. All right. Right now we're making a higher low. Right now you can see. Oh, come on. You can see the higher lows were being made, right? But we've got an impulsive move below that low. All right. So price is now flagging bearishly. All right. There is a baby trend line going on here. All right. We got a baby trend line going on here. So if price is, do I think that this is a market that is reversing? No, not quite, because here is where I would look for price to break before I say, all right, the upward trend is quite possibly over. And because this is market structure here. All right. This was market structure here, and we broke it to the upside. That's a bullish break of market structure. And this low and this high becomes our trading range. And as long as we're inside this trading range, any up and down without breaking the high or the low doesn't really count. It doesn't really matter to me. We're still bullish until the low is taken out. All right. So price took out this low. All right, kind of like an internal low. All right, and I'm looking at it flag now. I think this is going to flag. All right, and I believe that we may be setting up for another short for further penetration into this demand zone. Okay. Now, some will notice that we are in a descending channel, right? And price could come up here, flag up, and then come back down. All right, and that could make sense if that's the way you trade. You know, I marked it out. It's pretty cool. All right, but I'm looking at this low, and I'm looking at short-term lows, and you know, as price gets closer to an area where I believe we should start looking for bearish price action. You know, I'm looking for confirmations for a short. All right, but this is a long-term upward trend line. All right. So I got to keep that in mind. If price comes back down here to the trend line, I believe the trend line will quite possibly hold. All right. And I'm going to be looking for some bullish price action. I'm going to be looking for some bullish price action because this could be a top and bottoms of a range. All right. I don't want to confuse you. All right, because I know I'm losing some folks. All right, these are short-term moves. Price has a bearish, impulsive move here. I'm looking forward to flag and maybe set up a nice short-term play to the downside into the 50% mark, maybe to sweep this low of this demand zone. This isn't on my hot list. All right, euro pound is not on my hot list, but I think this is an opportunity here. That's all. Okay. And I believe that we may be, because we have a failure to make a new high here. All right. And we actually broke the low that made that high. I believe that we have a short-term bearish selling opportunity that may develop, but let the market pull back. Like I told you, this is a pullback week. All right, let it make the bear flag, and then take your trade with confirmation. Does that make sense? I hope so. Now, pound USD is on my hot list. All right, I always look at euro and pound because they are US dollar pairs. All right, now what are we looking at here? All right, last week, what did I tell you? All right, I said that we have price making bearish move here. We have an impulsive move, a correction. All right, let me use this and draw it. All right, we have an impulsive move. We have the correction. We have a move that took out that low. All right, we have a move that took out that low. We have another correction, and we have downward movement again. These are lower low, lower highs, lower low, lower high. And I'm looking for this low to be attacked. Why do I think that low will be attacked? Because it's a weak low. It didn't make a new high. That's its only job. It did make a new high. It failed to do so. So I'm looking for it to get liquidated and this demand zone to be mitigated. Okay. All right. So you got to let this one cook. You got to let this one cook. I'm talking to people who want to take a longer term trade, slightly longer. I ain't talking about holding it for a week or anything. I'm just saying, as opposed to scalpers and day traders, let it cook. All right. This was an impulsive move to the downside. Oh, I wasn't supposed to take that. This was an impulsive move to the downside, right? Come on, can I get it done, please? This was an impulsive move to the downside. All right. If price comes down here from this point, from where it left off on Friday, if price comes down here, takes out this low and mitigates this zone, this becomes a less high probability trade. The high probability is reduced, in my opinion, because this is probably going to want to go higher up to this zone up here. All right, and then come back down. All right, because it's going to have liquidity. It's going to have a lot of juice to make that move. All right. However, if it goes up from here, if it flags up a bearish flag, closes this fair value gap, if it flags up first, then comes down, I'm looking for price to give me that high, low, higher high, lower low, lower high, and then down. That's what I'm looking for. I'm looking for that once it mitigates this 4-hour zone. That's if it doesn't sweep this low beforehand. You understand? In either cases, I'm looking for price to continue down, but I don't want you to take a low, take a short in the middle of a range, in the middle after an impulsive move. This is a dangerous place to take shorts from. All right. You can take those, but if that's the kind of trading you want to do. All right. But I look for the pullback first. That's what I want to look for. This demand zone, this supply zone did have a sweep here. That's where that little X is. I have to really see. I like to see a sweep to create a supply zone or a demand zone. I want to see a sweep of liquidity. All right. This one swept these highs. So I'm looking at this one for sure. And this is where price took that long dive. And I want to point out that last Sunday, I pointed to this zone. All right. Excuse me. And we were looking at this pin bar. All right. We're looking at this pin bar. And I said, this is Friday, low volume. Don't just trust this pin bar or whatever. It failed to make a new high from this pin bar. All right. At this demand zone. And I saw the bearishness. I said, look for the low to be to happen from here, because this is a supply zone, and we can come up and mitigate this supply zone. This would be a great place to take the short from, and it turned out to be fantastic. Listen to me. If you're rich behind that trade, drop me a line, drop me a comment, and hit the like button and make my day, will you please? Thank you very much. All right, so you got my signal from here. All right, it's not a signal. I'm not a signal service. All right, but let it flag, let it pull back, and let's see if we can get a confirmation trade here. Look on the 15-minute, and you'll see a confirmation trade here, and maybe you can get a nice day trade to the downside, a nice day trade entry. All right, if price does come down here and takes this low out for liquidity, still look here first. All right, look here first. Only take the trade with confirmation. Look for that break of market structure, that bearish break of market structure, and then you can and catch the pullback. All right, but I'm thinking that it may come back up here if we sweep that low first. All right, I just repeated myself. I don't mean to do that. All right, let's look at pound Swiss. This is a funny one. All right, I just want you to be careful with pound Swiss, because the Swiss, I believe, is going to outperform the pound, but maybe towards the end of the week. All right, let's look on the daily. All right, and you can see this is kind of hard to mess with. You see how it broke this high here, right? It comes down, breaks this high. You're thinking, okay, we're turning bullish. It pulls back for the RTI. All right, and then continues higher. Great. All right, we'll make a higher low here. Boom. Oh, it's not quite a higher low. Higher low is only formed when it breaks the high. So price comes back down, comes back up, comes back down. All right, just understand, where are we within the range? This is the bottom of that range. This is the top of that range. Anything that happens in the middle of it, is kind of like, you can look at as noise until that high is broke or that low is broke. All right, so price comes back and we're ranging. All right, so in ranges, you want to take sells from the top, right? And you want to take buys from the bottom. All right. Well, we're heading towards the bottom after a mitigation of this zone, of this demand zone here, right? All right. Now I got this as a weak low. Why? Why do I have it as a weak low? Because it failed to break the high. It failed. All right. So it's probably going to get liquidated, and we're getting closer and closer to it, aren't we? All right. So what are we waiting for? Prices. This is correction. All right. That is correction. Let the market correct. All right. Let the market correct. We're probably going to go into this fair value gap. We're probably going to want to touch this this trend line and mitigate this zone up here, this demand zone. All right. That's a lot to ask for, but you got to be patient with this. All right. Now there was a nice impulsive candle here to the upside, and price kind of dithered here a little bit for what, since what is that, Wednesday, Thursday, and Friday. Okay, so are we going higher or lower? All right, let the market tell you. All right, don't take trades from the middle of a trading zone, from the highs and the lows and stuff. Don't take trades from the middle. That's dangerous. I'm telling you, it's dangerous. All right, it's not, those aren't high probability trades. I'm thinking price is going to take this low out. All right, let it form. Let it give you a confirmation of some kind. Let it make a higher high, a higher then a lower low. All right, let it do that. Let it make this, pull back, higher high, lower high. I mean, lower low, then lower high. This is your opportunity here if you're going to take a short, but you have to get confirmations first. And I'm hoping that it comes up here, all right, where the trend line and the supply zone intersect. We can use it for confirmation, confluences, and you have a fair value gap there. Okay, don't just jump in. All right, don't just jump in. That's not the way you want to trade. Okay, we're going to move on to pound yen. Pound yen's very interesting. Why? Because we have a fair value gap. I told you about it last week. I told you about this this line of liquidity where we have equal highs, relative equal highs. And I said, price is probably going to come up here and take that equal high up and trade into that fair value gap. You see it in the last video. Just go check the video, will you please? All right. And I want you to see that I have this line up here, right? This is the high. I make a lower low, a lower high, lower low, lower high, lower low. But the higher time frame, let me get rid of this because this is just going to throw me. All right. But I'm looking at swing high, swing low. Have this swing, at that swing. We have this swing. Is this going to end up as a higher low? You see how this low here breaks these highs. We respect the low, and now we're breaking to the upside. All right, so this could mean a very nice reversal in this market, and we're going to probably see the pound outperform the yen. All right, so what I want you to recognize is I'm going to go down low to see what all this ink here is. But I told you that this is the fair value gap, and we should be going up into that, and the buy should be there. If we're pulling back to the demand zone, this is where you want to take your buy. All right, we have a bullish breakout of structure. This is where you want to take your buy. You should be in your buy right now. You understand? You should be in the buy right now. We're on the 4-hour right now, right? And I want to point out, I'll do it this way. Okay. Let me get a bigger pen. All right. Bigger pointer. All right. I want you to see that after this breakout, the breakout of these highs over here, all right, the breakout of this high, the market turned bullish. All right. Because we have a bullish break of market structure. We have a pullback, all right? Respecting the low, mitigating the demand zone that was created here. We mitigated it here, all right, with this pullback, all right? And you can see the bullishness in these candlesticks to the upside, okay? This is what I want you to recognize. We have a trend. Now we have a trend. Come on, man. Now we have a trend. Okay. So, and some people are going to call it a channel. That's fine. You can do it. You can do it. All right. But I want you to recognize that we have relative equal lows here and here. Okay. You got to be careful of relative equal lows. All right, because that is a draw on price. And if you know where the liquidity is, chances are you won't end up as the liquidity. All right. So I'm going to keep my eye on these lows here because I believe price is drawn to it and will probably want to come and sweep it. All right. At this point, this is going to be a high probability trade, in my opinion. Look for the pullback. You see that we've already broken. Let me get rid of all of this now, because this is proven to be a pretty big distraction. Whether you can see that or not, it's driving me crazy. All right, let me get this out of here. Thank you very much. All right, and we don't need this. All right, so I like the fact that we broke. I like the fact that we broke this high here. All right, this is a good change of character. Price down. All right, pulled back, made a low, broke the high. I'm looking for price to pull back into this zone area here, quite possibly to sweep that low, sweep the low of this candle to take that liquidity and then continue higher. All right, holding the low, holding this low. All right, and you know, just respecting the low and continuing higher. But we got to wait till the price pulls back. All right, now there's a couple of areas that I want you to watch. All right, watch this area here. All right, at 162 and this low. All right, after this low, I'm looking for price to give me a confirmation to take a high, to take a long position. All right, if it comes down here and gives it to me, that's fine too. I'm looking for confirmations first, but wait for the pullback. Wait for the pullback. This week, you got to wait for the pullback. Let's go to USDJPY, USDJPY. This is one of my favorite markets. Why? Because it's so clean. The price action is so clean. Look at this channel. All right, lower low, lower high, lower low, lower high, lower low, high, lower low, and all that good stuff, all within that channel. Then we have the breakout. This is one I pointed out last week in last week's video. Go check out that video right now. I'll leave a link in the comment section. I'll leave a link in the comment section, okay? And price pulled up. Sorry. Let me see, what day was this? This was the Friday candle. Very bullish. And we see that bullish break, candle body break and close above the channel. All right. So this is what I was watching. This confirms that we're going to continue higher. Price pulls up, pulls back into the demand zone, which I illustrated last week. All right. And if you took your buy, you should still be in your buy. I told you these levels here are like stair steps. The way it's stepped down, that's the way it's going to step up. All right. So price makes it up to this this level here at 134.48, 489. I told you watch this level, look for a candle body break and close. I told you in that last video. All right. We finally got a close right at the same level of the previous Friday candle right here. Everybody was thinking that this is a pin bar, an inverted hammer, and all that good stuff. We could take it all the way down. No. I said, this is Friday candle. That's why I got this exclamation mark, like, watch out. All right, that's what that means. I said, watch it. And we finally got our break and candle body break and close above. I said, watch this level. All right, we need a candle body break and close above that level. We finally got that on Tuesday. It pulled back and it took off. All right, y'all better pay attention. Pay attention and drop a like and hit hit me up in the comments, will you please? Because I want to hear from you if you took what I said seriously. Now, where are we heading towards? Up here. That's where we're heading to. We're heading to 137,780. All right. I believe we're going to make it up there, but this is an impulsive move. What have I been saying this whole video, this whole session? Wait for the pullback. Wait for the pullback. Taking a buy from here up is a dangerous move because you're in the middle of the flow. Let it pull back for you. Let it come back to right around this demand zone area, what I have marked here. You can see it to the side, 134,998. Actually, it's 135. Just call it 135, all right? Make it easy on yourself, all right? Call it 135, all right? Wait for a pullback to this area. Wait for a pullback, and then wait for a confirmation, all right? This is the way to trade. Wait for the confirmation, and then take your buy up to the next level, all right? Just travel the stairs like it was made. Travel the stairs up. You understand? All right. The US dollar is going to outperform the weaker yen. Just like with the pound and all. Pound is weak too, but it ain't as weak as the yen. I'm trying to tell you. All right. Now there's some news coming from the Bank of Japan this week. Watch out for that because it'll have probably introduce some volatility to the to the yen market. All right, let's go. US dollar CAD. I pointed this out. Y'all saw me. I pointed this out last week, right? Showed you this whole thing. I'm not going to go through the whole thing. Just watch the last week's video and you'll see. All right. So we have this this wedge pattern forming, and I said as price keeps going into this wedge, it's got to make a decision. Right? We're looking for a candle body breaking close on a daily basis. We're looking for a daily close beyond this zone. What did we get? What did we get on? Let me see. This was Friday's candle right here. This is the candle I pointed to when I gave the video. This was Friday's candle. It looks like a pinball, right? Inverted hammer, right? I said, don't take that for a short. Don't take it for a short because it's a Friday candle. You got to be careful. And what happens? We get to break out the opposite direction, right? We got a candle body breaking close above the trend line. This is an indication that price was going to go up. Well, what did it do? All right, this is Tuesday, Wednesday, Thursday, Friday. Boom, 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 all the way up, right? What am I telling you to do? Hey, I got those green dots there for a reason. This is all the entries you could have taken to take this up. All right, once we had a breaking close above that high, you're supposed, and it pulled back, you're supposed to be taking advantage of those entries. You understand? That's the way this works. All right, let me go back to the daily. All right, come on, man. Slacking. All right, so what am I telling you to do now? You see, this is an impulsive move, right? Just let it settle, man. Let it come back. Let it come back, man. Just lay back. Let it come back. All right. It may come all the way back to the breakout area. All right. It may come back down to this area, but look for price to come back in the inside of that zone. All right. I like it. I like it to come back within this candle. All right. If it comes back below this candle, that's okay. That's okay too, because there is below this candle is the fair value gap. You can see it from the top of this candle here to the bottom of this candle here. This is a fair value gap. It likes to get filled. All right. And price could come down here and give us our confirmation for an entry to the upside. So I want you to watch those levels. That's it. All right. Let me be specific. All right. I'm going to give you this demand zone here, right at the breakout. All right. I'm looking for price to come here. And you can see the numbers 1.34948, right around 1.3500. All right. This is the breakout area. That's why I have this here. Look, 135, 1.35, right? Look for price to come back and test this breakout area. All right. Wait for it. All right. Don't take a buy from up here. That's silly. Look where it's rejecting from. There's a lot of turbulence up there. All right. Wait for it to come back, quite possibly sweep these lows, and mitigate this demand zone, you know, sweep those lows for liquidity, mitigate the demand zone, and continue higher. All right. That's my prescription. I'm your doctor. All right. If you want a doctor, in trading, hit me up in the comment section and drop a like for you. All right. What does that say? Finally, break. Oh yeah, this is what I dropped in the chat. Okay. Aussie USD. Already told you, man. This was one of my favorite setups. Why? Because it gave a very clean price. They gave very clean price action. I pointed out that this is a head and shoulders, all right? And this was the neckline from here. You can see this as a neckline. Price finally gives a candle body break and close below that neckline, and we have downward movement. This is what I talked about in the video. All right, go check that out. All right. And I was waiting on it, just waiting on it. Look, this was, let me see. This is the Friday candle here. All right, this Friday daily close. It closed in as a funky little dragonfly, doggone, what do you call it? Pin bar. It's not really a pin bar. It's a like a dragonfly, whatever. Anyway, and it created this demand zone, this supply zone here, and price finally took out the demand here. This was a larger demand, right? Price penetrated all the way through, all right, with a close below it. If price comes back up, that's why I had that green light there. If price comes back up, let it flag, man. This is an impulsive move to the downside, and I'm still bearish in this market. Made an impulsive move to the downside, let it flag up. All right. If it comes up here, this is a high probability trade to the downside, in my opinion. Okay, because this is a flip zone, a demand to supply flip. All right. You look for price to give a what do you call it? A reaction. All right, to the demand zone, which it did here with this candle, that doji. All right, it gave a reaction. Came back up, pulled back. I'm looking for price to come back up and then continue down, because I believe these lows are going to be swept into this fair value, and then a mitigation of the demand zone below that. It's going to take a while to get there, but I believe if we just let it cook and form, we may be pretty good. It's going to, if it comes back up to this deadline, the neckline, all right, that would be a high probability trade. Look for this zone here as well. It's not as high probability, but I think there's some there's good reason to keep an eye on it. Okay. Next will be the New Zealand dollar USD. All right. Pointed this one out as well. You can see that message on your own time. All right. You can see we have a similar situation like we saw in Aussie dollar, except there's the head and shoulders is not as prominent, right? But you can see that there was a downtrend. 1, 2, 3 touches, right? You can see that the downtrend held as price mitigated this weekly and daily zone of supply. And you can see how hard it fell here, all right? And you gotta love seeing that, all right? Now, it left the fair value gap below, and that's something to keep your mind on, because that could draw price back up there. But price did react to the demand zone here multiple times. We had a sweep of the high here, took a sweep of liquidity, and then price finally gets a break and close below. And what did I point out last week? I pointed out that there is relative equal lows that is going to draw price down here. And what did we do? We took it out. We took it out. If you're rich from this NZDUSD trade, drop your friend here a like. All right, drop me a like and drop a comment. All right, I have this exclamation point here because this is that pin bar that was left last Friday. Now, and I warned, don't take it as a bullish move to start jumping in for buys and stuff. All right, And if you listen to me, you see that price continued down from here, jostled about, and then finally we get a close below that low, or a sweep of the liquidity here, and everything. We got a break, a candle body break and close below this very important key level. All right, so I'm thinking price is going to come on down. All right, and this demand zone down here is where I fear we may be heading towards. Now, there is a measured move, and I should have pointed that out with the Aussie dollar USD. You can see the measured move from the height of the head and shoulders to the neckline. Well, from the neckline to the low is where I want to see price make its move, you know, get its full profit. This should be the full extent. This is called a measured move, and that brings us into the fair value gap right below, right above this demand zone, which I believe may lead to buys or whatever, but we'll reassess once it gets here. You understand? All right. So if we do the same thing, if we have that same thinking with NZDUSD, I'm thinking that price is probably coming down here. All right, to sweep these lows for liquidity, and maybe we may see that it end up down here, right around 6,000, right, 0.6,000. Okay, so if price does pull back, let it pull back, man. Don't just jump into the shorts from here. Don't do it. Do not do it. All right. What I'm going to tell you to do, let it cook. All right. Let it push. If it comes back up to this breakout level, all right, if it comes back up to this breakout level, let it give you confirmations. A high, a higher high, a break of that low, a market structure break, and then a pullback. Catch that pullback, and that'll be your entry. If it doesn't give you that, I'm not going to enter. All right, it may want to pull back up to here, to the flip zone, to demand to supply flip. That's why I got that eye there. All right, if it does that, I'm looking for the same confirmations up there so I can take a short. You understand? That's it. That's it. Hope that doesn't sound too crazy or complicated. Now we're going to gold. All right. Last week in gold, I told you, I pointed out that price would pull back, and I was hoping it would come up that high. Missed it by a little bit. You can see it didn't quite, but it did pull up. All right. I was looking for it to flag a little harder, honestly, and I thought it would come up here, but it did come up, and then it fell from there. Didn't give me my classic entry up there. I'll be honest and tell you that, because I like to look for a high, a higher high. Oh man, what did I just do? Let's do it this way. A high, okay, you're not gonna let me. All right, a high, a higher high, a break of that low, and a pullback. This is my entry right here. This is my entry right here, and I take it on down. That's it. All right. If I don't get it, I don't get it. All right. This one came down. There wasn't that strong break and the pullback, so I didn't go. There was an opportunity to get in here on the lower time frame. There was an opportunity to get in here, and I'm hoping that somebody did take advantage of that. You can see it on the 4-hour. Pulled up, kind of dithered about, right? Push down, and we had a little pullback. We had a better pullback here where it gave started a little bit of a downtrend that price held to, and you could have got in here and came on down. But I was actually looking for it to come up a little harder. I was looking for it up here. So if I don't get it, I don't fret. It's not a loss, so I'm all right with it. In either case, what are you expecting this week? In either case, what are you expecting this week? Well, what did I tell you to do? What did I tell you to watch out for? I said, look for this demand zone to fail. All right. And I had my eye on this level, 1800. Are we not moving towards that level? Where were we last Friday? at this pin bar, this bullish pin bar here. And I warned, don't be taking it just thinking it's going to shoot on up or whatever, start a pullback. If you listen to me, you are supposed to be in a short and you should be rich. That's all I'm saying. If you're rich, hit me with the thumbs up. Let's get this money. All right. All right. So don't take your short from here. That's too dangerous. Your move, your entry should have been here, here, and maybe your last chance was to enter here. All right. That for shorts on those pullbacks. You don't have a pullback right now. All right. Just let it go. Let the market form. As it comes down here, it's probably going to give a break of market structure to the upside. Once it does, look for the respect of that low and then take the buy. All right. We may be heading back up because this wasn't a real pullback. We might come back up here to those highs and finally hit that line. So I'm looking, because I think there's going to be a pullback. I think price is going to flag before the next move down. I think we're going to see that flagging to some degree. And I'll be looking for confirmations for a short to take it down. That's what I'm going to be doing. All right. But here is where that magic is going to happen. Why? There's a reason why I have this level situated there. All right. Because it's acted as support, break, resistance here. And then we have all this here. All right. I'm thinking that when it visits this again, I didn't mean to do that. When it visits here again, I'm thinking this is going to hold and we're going to get a break of market structure to the upside. It pulled back. It'll show respect to that low. And then we can take a higher probability trade to the upside. We'll see. Just let it cook. That's all I'm asking you to do. Let it cook. Silver. Now, listen. I want to make sure I stress something. I think this is a bearish market. What I'm talking about is a counter trend trade, and we're only going to go as high as there. All right, as 1860. All right, I'm not trying to take it all the way up here. I'll probably temper my expectations on this one. All right, if you want to take it longer, you can. But I'm thinking we're going to get a pullback, and I don't know if we're going to get as high as that high up into this fair value gap. That's going to be a drawn price, but this is a counter trend move. And when I don't go as far with my counter trend moves, and you shouldn't either. All right, I don't think we should swing for the fences up here. All right, this is a long journey. All right, so there's a supply zone here that reacted to this demand zone. So this could be a flip zone here. So I'm going to stop here if I can get in down here. I'm glad I cleared that up. Hope you guys don't get confused by it. Now, we're in a weaker market with silver. Silver is weaker than gold right now. All right. And you can see I pointed to last week that price would come up to this to this supply. I'm sorry. All right. I was hoping that price would come up to that supply to take a high probability trade to the downside. It went in that direction, but it didn't pull back as far as I would have liked. And that happens sometimes, and nothing you can do about it. You see the demand zone here and this supply. All right. It's a demand to supply flip. All right. Price had already traded into the flip zone, though. That's the thing. So price comes down, boom, pulls back. I'm thinking it was going to pull back all the way to the zone, to the breakout area. This is a weekly major breakout zone. You can see what I mean by that, right? Look at it. Look how price has reacted to it to the left. Just look left and you can see all of that action. All right. And you can see that that's an important level. Okay. So if price does come back here, I'm looking for this zone to hold. All right. If we do get flagging, a bear flag, if price does go into a bear flag here, if it gets up here, that's a high probability trade, in my opinion. All right. I think we should take shorts from there. All right. But if it doesn't, maybe let me get rid of these because I got only 1 out of 2 arrows right. Didn't pull all the way up. It pulled halfway up, and then it went down, and that's a shame. All right, maybe you got in on that short, and congratulations to you. All right, so if price pulls back up, I'm thinking that there's a good chance it may only, come on, man, I'm trying to mark here. It may only get this far. Okay, it may only get that far. Let me get that a little bit lighter. All right, may only get this far. So if we see the flagging, if we see the flag, it turned into a bear flag. All right, as price comes up here, let's see if we can get confirmations here. And definitely the higher probability trade will be here. This is going to be a pretty good trade if it gives us a break of market structure to the downside and a pullback. And then we can take that trade from here. You understand? We're going to look for the exact same pattern up top, up here. All right. If you've been watching my videos, you know how I trade already. You know my generally how I enter. So those are the things to look for confirmation. I'll go into more detail with it in another video. But you see this dotted line here at 20.80? See this? See this? See this? You see this? You see this? This is right at this demand zone. I'm looking for this demand zone to quite possibly hold. All right. It may hold. And if it starts to flag, I'm looking right here. Now, if it takes out these lows and comes down here into this fair value gap, the chances of it coming all the way back up here start to weaken. You know, I'm looking for price to come up here and test here and quite possibly here. But if it continues down bearishly, do not take this short from here. I do not recommend it. There are relative equal lows here that is going to draw a price to it for a sweep. Let it sweep and then let it flag. Let it turn back up, and then you can catch that that short there. You understand? Just let it cook. All right, because I think we're coming down to these lows. I do think there's a good chance that we might be coming down to these lows, but this area is pretty resilient. You can see how it's been acting as support and resistance. So we might see at this demand zone price turn back, and we'll see if we get it. All right, if price gives you confirmations for a buy here, you can take it. Would go silver as weak as it is, I'd rather take that chance with gold. But with silver, I'm not going to take that chance. I'm looking for it to give me more shorts, honestly. So this low, that high, this low, this lower high, I'm looking for these lows to get attacked for liquidity. All right. Let's go to the specs. All right, SPY. If we go to the daily, we can see that here, we have a trend line, and that's pretty cool. That's nice to see. But we have traded below this trend line now. All right, that is Friday's candle. We've gone below the trend line. Conventionally, in conventional traditional trading, when we have a breakout of supply, I mean of support, we look for it to come back and test that support as a resistance and then come on back down. All right, I'm not that kind of trader. I don't trade that way, right? Not necessarily. All right, what I look at it is this demand zone failed. All right, did we get a reaction to this demand zone? We got that reaction up here. Okay, great. All right, why do I have a dotted line up here? That we had seen that we're tested as support. All right, support, I've said support the whole time, right? All of these are resistance. All right. I'm getting tired. I'm sorry. We have resistance, resistance, and then we finally have a breakout. All right. And price mitigates this demand zone, this supply zone up here. Right. There's a price gap up there that is going to draw a price to it. But we mitigate it. All right. And we start to fall. All right. We finally get a candle body break and close below this important key level. Okay. And that's what I keep repeating here because it's important. All right. Because it signals direction. All right. Price pulls back and we have the follow through. All right. Bearish price action. All right. Now, where are we now? We come down. We've taken out this demand zone. I'm looking for price to quite possibly retest up here. All right. I'm looking for that retest up here and a continuation of bearish price action. All right. We're going to see a pull up first, though. Let it cook. We're going to see a pull up. If it starts to correct and we come back up into this area up here, I'm looking for price to hold. I'm looking for price to hold for another move to the downside. I'm looking for price to come down to this demand zone at 3925. 3925. We're almost there. I wouldn't take a short from here. I wouldn't do it. I would not do it. I would not do it. I'm looking for price to flag. Let it bear flag up here and then come back down. All right. We'll see how this goes because the markets may turn risk off this coming week, within the next 2 weeks. But I think it's going to go up before it comes down. And I'm looking for it to correct this move. All right. At least 50% of it. Okay. I'm looking for a 50% correction. So if price comes up here, I'm looking forward to do that. Does that make sense? Okay. Then we're going to move on. All right. This is a different look on from the Orlando broker. You can see it coming down, push. We pull back up into this supply. All right, daily supply. And then we have a lovely, some people would call a double bottom, a double top. All right. But it pushes up, fails to go any higher, and then breaks market structure to the downside. Boom, boom, boom. If we break this, we have a confirmation that price is going lower for sure. All right. A confirmation that market structure is being broken. But this is the swing. This is the swing low. If we break that swing low, oh my gosh, we're coming towards these lows after that. You understand? That's not going to be good. Let me get back to where I just was at. I don't know how I ended up here. Okay. All right. So that's something to be careful of, be wary of. This is an impulsive move. I'm looking for it to correct. Maybe we come up. If I can just get something to write with, maybe we come up here. And price comes up, and we can come on down. You understand? I'm looking for that flag. I'm looking for that flag. We can come up and test these lows up here. And then we can come on down. Go WTI crude. Let's see how direct this movement is. We break that low, right? Boom. And that's great. And then we take out that high, respect this high, right? And we are, when it breaks this high, you think, oh, we might be turning bullish. It comes back out, respects this demand zone here, pulls back up, fails to make a new high, and then we're trading below that breakout point. I love that because it gives us clarity, right? We have a bearish market, but it is moving sideways right now, right? This move failed to take out that high. That means this low should be under attack because it failed to make a new high. It is a weak low. And come on, man. So I am looking at this low here, which took out that low. All right, you can see price made this low, pushed up. Looks like it may be a higher low. Technically it is, but it never gave a candle body break and close above, which would indicate a strong it's a strong indication that price wants to go higher. Instead, it goes lower and it breaks that candle low, that week low for liquidity, top and bottom. So you're left with a very manipulative move by market makers. All right, sweeps out those people who took shorts, their stop losses being up here above these highs, and sweeps out those who took longs from over here, stop losses below these lows, swept them out. And now we have a failure to make a new high. And here we are coming down to this demand zone that it left behind. And you see that blue dotted line? That is an upward trend line. All right, it's an uptrend. All right, price came down to the demand zone, comes here, and you see Thursday's candle very, very bullish, and then we have Friday's candle, another pin bar, but this one comes on the heels of a very bullish candle. So I like this setup. All right, I got a exclamation mark there because on the 4-hour you can see that this was a strong indication. What happened here? All right, I was expecting price to come down into this demand zone, and if you remember, I don't have anything to drink to wet my throat. All right. If you remember, this was the candle. This was Friday's candle here, right? In the middle of this range. I was like, I told you, take shorts from the top, longs from the bottom, leave the middle alone, right? So what does price do? Price opens up on Monday. We have an inside bar here, all right? Fails to, what it does is just test the bottom of previous week's candles, right? The previous day's candles. Test the bottom of those candles and then drops, bam, bam. And you see my arrow here. I was thinking the whole time we're going to test this low because it's a weak low. Failed to make a new high. All right, came pretty close to doing so, but then we have this bullish move here. So what am I expecting now? I'm expecting price to correct, to flag, and quite possibly be held here. All right, this looks like a demand trying to form. Price pulled down, trade back into it. It's mitigating this this area, this bearish, bullish, bearish candles stick pattern. All right, and hopefully we'll get that mitigation to this demand zone and at this trend line. All right, if we get that and I get confirmation, I would love to take that long because I believe price is going to go higher. I do. All right. And if we get confirmation of it, then this will be a great entry, in my opinion. All right. If we go to the 4-hour, we may get, you can see that there was an entry here. You see this mark here? This is, as price is coming down, pulled up and then down. This is your change of character. Price changed character as soon as it wicked beyond that dotted line up here. All right. So when you have that situation, you're supposed to be looking for the return to impulse. All right. This is the demand zone. You're thinking this low is going to hold once it breaks that high. Well, it came back down, the low held, and this is where you're supposed to be taking your trade. All right. Now, this is an aggressive entry. That's why I didn't take it. Two reasons why I didn't take it. It was too aggressive for me because one, I was hoping that price would come down to the dotted line. I was hoping that price would come down further into this demand zone. It was close, and I fretted about it. And I said, well, if it passes up there, maybe I'll take it. It danced, and then it gave a pin bar. Bam! I didn't take it. I said, this is Friday. This is a Friday candle. I don't want to enter into a trade. I'm going to hold a swing trade that I'm going to hold for a long time. I don't want to do it on a Friday. That's not the way I trade. That's not according to my plan, you know, and that's the way I trade. If you want to enter into longer term trades on Friday, you can. All right. Weekends tend to have some funky things happen when it opens up on Monday, and you know what I'm talking on Sunday. You know what I'm talking about. Sunday and Monday, you get those gaps, and it could gap down, it can gap up, and it can mess you up. I want to see the trade Monday through Friday. Okay, so if you got in on this pin bar action, leave a comment in the comment section, and let me know if you know what your trading style is. Let me know that this is what you've been. This is the way you like to enter in on longer term or shorter term trades. I'd like to hear from you. All right, and that's it. That's it for this session. I appreciate you staying this long, and you know I go over a lot of markets. I go in detail, and you know if it's not quick enough for you, hey man, you know you're past my level, and you need to look at somebody else perhaps. I don't know, but I take my time with these markets because I like to talk to my viewers as if they're in front of me at my table drinking tea with me or something, you know what I mean? And that's the way I do it. Okay, so I'm hoping that you find a benefit in that. Do smash the like button. Do leave a comment asking me a question about anything that I went over today or last week. I'll leave last week's video, which I made constant references to during this video. I'm sorry to drive you crazy with that, but I need you to know that I think what I'm doing is legit, and I want to see if you think so too. Okay, I want to hear from you. All right, I'll see you in the next video. Thank you for watching, and may profits be upon you. Please trade safely next week. It's a pullback week. It's a pullback week, so you got to be patient with it, okay? Talk to you later.